Hey guys, Mike here. So boy, if you didn't know about it, let me go ahead and tell you, GDP came out negative again this morning. So that's 2 quarters in a row. But guess what? Did the market care? Just like I said, no, it did not care. It started off red, fought its way back into the green. All indexes up over 1%. Some stocks up over double digits. And tomorrow should be the same thing, because now after we got these earnings, which I'll go into with you, the big mega caps did what they had to do, right? All they had to do was trip over the finish line. That's all they had to do. And the earnings weren't bad, right? And so better than most people thought, and it always helps. Like Apple, they just don't guide forward, so you really don't know what to expect. So everything looks good, right? And so, that we're going to go into. And one question I got off one of the videos this week was, hey, was, June the bottom? And, what do you think? And all that stuff. And I was like, I usually try to keep my opinion to myself, but I say this is what I asked myself, this right here. Whether that was the bottom or just a bottom. And understand these rallies they can go on for a long time, by the way, just FYI, if this does continue. And there's no news that should derail it at this point in time. If a negative GDP print for the second quarter can't, if these earnings that came out this week can't, what really can? Seriously. You think GDP coming out of Europe is what's going to tank the market? We get that tomorrow, or CPI, I think. Well, it might be CPI or GDP, one of the two, but come on, really? And so, right now, I look at it this way. I ask myself simple questions, but you got to answer for yourself. I say, okay, is the Fed going to stop tightening anytime soon? No, they'll continue to raise rates. Is that going to make money more expensive to be able to get, especially for smaller companies? Yep, sure is. And for people in general like us? Yep, sure is. Are they supposed to start, tripling the roll-off on their balance sheet in like 45 to 60 days? Supposed to. If they do that, we'll have to see. Have we felt the effects of it like Jerome Powell said yet? Nope, won't for a while. On a global scale, are central banks tightening like we've never seen before? Yes. You have central banks that hadn't raised rates in decades raising rates right now. Is the energy crisis in Europe going away anytime soon? No, probably going to get worse, especially when winter rolls along. So, nope, that's not going away. Are real wages going to continue to decline? And we'll find out a lot about wages tomorrow. Answer most likely yes. Is inflation going to stay above at least 6, if not 7%? For quite a while? Yes. Is that going to continue to erode the savings that Americans have built up, and maybe other people around the world have built up as well? Yes. Do all economists agree, and pretty much everybody with any common sense, that we're in a global slowdown? Yes. And so my answer to all those questions, and yes, and I'm sure I missed some, but it all hinges also on, one, how strong the dollar is going to be, right? And I'll do a chart on that this weekend to show you why people aren't jumping up for joy right now, because on a technical level, it looks like it actually is either going to pop or drop hard, okay? Is oil going to stay down? We don't know. That's just the truth. Are we going to have if commodities going to stage a comeback? We don't know. We'll have to see. We'll see when the crop comes in, right, over the next few months, what's happening to food prices. So we'll have to see, right? Those three things are an anomaly. Who knows? Now, you can have actual recession, right, and still have a stock market going up. That's just the way it is, right? Stocks usually bottom way before. Remember, once you find out you're in a recession, you've already been in it, right, the whole time. Once you confirm it. And I don't think they're going to confirm an official recession anytime soon. I don't think that's going to happen. I'd be shocked if they did. But, the rule of, 2 negative quarters or slowing quarters is a recession. You can go off that if you want to, but the market don't care. And so that's where we're going. And so as long as, and what you're going to see here, and you've seen this already in these earnings, certain sectors, which I'll go into either tomorrow or this weekend for you, are getting destroyed. They're actually getting nuked on all the earnings. It ain't happening. They're out of favor. The whole sectors, okay? And some of them we'll go over one of them right now. And so that's what you're going to see. And then you're going to see the mega caps. Everybody's piling into them. It's just the way it is. They're like safe havens right now, no matter what's happening, because they have a lot of cash flow coming in, and they just got moats and everything else built up. And so it's like they're too big to fail type of thing right now. Okay, in the future, that might not be the case, and that's usually always the case. And so, but that's where we're at, and that's what I believe. So do I believe, maybe in Q4, Q1 of 2023, we actually start heading back down? Sure, if the slowdown continues, that's what's going to happen. And it can turn fast. Everything look hunky-dory, and all of a sudden, I'll do a video, I'll put this in the video this weekend or something, and show you how everybody keeps talking about unemployment so low right now. But I'll show you the chart that shows you, unemployment was pretty much always low right before a real recession hit. So, but it can turn fast, right? Just right now, it's just not happening. So it is what it is. And so, getting into the earnings, and this is why tomorrow I'll be stunned if we're not super green unless people are just taking profits. Because remember, every rally fizzles out, right? Everybody takes profits who don't believe in the rally, and then push up some more if that's the case, because we're starting to regain those moving averages. Again, I'll show you that in the charts probably tomorrow or Sunday. We'll see. But starting with Amazon, which is the big boy, it is up huge.
This is really important. We're not comparing this to the Wall Street consensus because, remember, Amazon's big stake in Rivian, that has been wreaking havoc on these numbers. And remember that these shares were down nearly 50%, Rivian, that is, in the quarter. So that is likely messing with these results. The important thing is revenue. That came in greater than expected at $121.2 billion. However, I want to run through guidance, arguably the most important numbers to come out of this report. Amazon is expecting Q3 revenue of 125 to 130 billion. 126.4 billion was expected by the street. It's expecting operating income of between $0 and $3.5 billion. That is actually light, I'm seeing. The street was expecting $4.4 billion. So we're going to run through this report, find out more. But remember, they took a $6 billion charge in terms of those extra costs relating to extra capacity, extra labor at the warehouses. We'll continue to run through this, Scott, and bring you more. But that loss of 20 cents, remember, likely has a lot to do with Rivian.
And you can see it's probably the most I've ever seen it up. Honestly, I can't even remember this, but it's up around 14% right now. And so people are loving that. And, it's funny, though. You look at the revenue growth year over year, the quarterly year over year percentage, way down there, 7%. I mean, and understand what you got to understand about Amazon is they don't make money on e-commerce. They actually lose money. Right now, where it all is for them is Amazon Web Services, AWS. That's their moneymaker, okay? And so that's something to keep an eye on. Can they continue to grow at the rate it's growing at? And they have a lot of their hands in a lot of cookie jars. Remember, they just got into the medical field as well. They opened up a clothing store for whatever God knows reason in LA, actually physical clothing store, I believe, for women. And so, they're just everywhere right now. It's all about AWS for them in the future. That's what really counts for them. And so next is going to be Apple.
That's right, Shauna. We saw revenue that's mostly flat. It's at $83 billion. That's versus expectations of $82.7 billion. It also, though, beat on earnings per share. It came out at $1.20. That's versus $1.16 expected. I think the big news here is that the iPhone revenue beat. Now, there were a lot of fears going on about whether or not inflation would impact this or not, but iPhone revenue came in at $40.7 billion. That's versus the expectations of $38.9 billion. So obviously, still a lot to digest here from Apple, but clearly a good report. We're seeing the stock up just a little bit under 2%, 1.6% right now.
It certainly looks like these numbers were enough here to excite the street. You mentioned revenue beating expectations, coming in at $83 billion. The estimate was for $82.76 billion. iPad revenue also beating the street's expectations, $7.22 billion. Products revenue, $63 billion, better than what we were expecting to see. Services revenue, Dave, we talk about the importance of services to Apple's future. That coming in at $19.6 billion, pretty much right in line with what the street was expecting, but certainly it looks like Apple placing more of an emphasis on services going forward.
And you can see the shares up 3%, not much, but this one's never going to move great because, its market cap is like $2.5 trillion, for God's sake. So that's a big move for a $2.5 trillion market cap. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And I will say that was an extremely impressive quarter for Apple because they were facing huge headwinds with China lockdowns, with the strong dollar. Remember, over half their revenue comes from overseas. And so how they even made it, I don't know, honestly. In the next quarter, they don't guide forward at all. So it'd be interesting because I think they were actually discounting their iPhones over there. And so I don't know how that's going to affect it. But you got to think, if they made it with this one, with all those headwinds, if the dollar does weaken dramatically, if China stops doing lockdowns, and they said they doubled the revenue in India, I believe it was, which is kind of a new market for them. It's Apple. So we all use their products. God knows I got 3 of them in the house right now, at least, if not more. And so, yeah, they just are who they are. So anyway, next is going to be the dumpster fire of Roku, another Cathie Wood stock.
Roku. We're just getting earnings results from the company. A miss here. We're seeing that reflected in shares, with shares sinking. Look at that, 22%. Revenue coming up short, $764.4 million. The estimate was for $804 million. They see third quarter revenue of just around $700 million, far short of what the street was looking for, which was just over $903 million. Loss per share of 82 cents. The estimate was for a loss per share of 72 cents. Dave, there was some hesitation going into this quarterly earnings report from some of the analysts that have been closely watching Roku. Wolf Research saying that they're facing two big challenges here: scale and monetization, and looks like we're certainly seeing that reflected in this earnings report.
You remember about 2 weeks ago when we heard an analyst come out and say there's a potential for a streaming recession, and now we're kind of seeing that play out. We saw it with Netflix, their first ever back-to-back loss of subscribers. We saw it this morning with Peacock. Subscribers were flat and losses widened to more than 400 million, and now the third of three Roku showing similar weakness in that industry.
Yeah, don't worry. I went farther down than that after everybody got on the call there, down 26%, as you can see, just a hot mess. And understand, guys, look, the streaming service, it's tough, right? And they're just connected to TVs as well. But, I think it was Comcast report this morning, and I believe it literally was 0 new subscribers for them, right? Whether it's cable, streaming, whatever. It's just that people aren't doing that what they used to did in the pandemic, right? And so people are out. People are watching less TV, less streaming. I've canceled a few of mine. And so, when you're sitting there, you had nothing else to do in your house but watch TV and stuff, you're big. And so they're just getting hammered. Absolutely hammered. And so the last one, which is not going to bring down semiconductors at all, because I looked at them, it didn't even affect them, is Intel, which is another one. And it actually got spared. But this is some of the worst, biggest misses and worst guidance I've heard of a lot of these calls. And I've heard some bad ones, but this is pretty dang bad.
Intel just reported second quarter earnings after the bell. Yahoo Finance's Jared Blickery here on the same day that the CHIPS Act passes the House, which really benefits Intel, and shares are plummeting, Jared.
Dave, ironic that there is no boost from that. Let's take a look at the numbers, because let me begin with a quote from the CEO, Pat Gelsinger. Gelsinger, we must and will do better. And we're going to go over those numbers, see if they can improve upon them. Adjusted EPS for the second quarter coming at 29 cents. The estimate was for double that, 69 cents, more than double that. And then just going down the numbers, client computing revenue, $7.7 billion. The estimate was for $8.8 billion. Data center, $4.6 billion. Estimate, $6.04 billion. Network was one of the few beats here, $2.3 billion. The estimate was for slightly higher, slightly lower, $2.26 billion. Now on to the forecast. This is where it gets a little bit scary. Seeing adjusted revenue of $65 to $68 billion. Previously, they saw 76. That's $8 billion higher, and the estimate on Wall Street was about $74.75 billion. Also, we're seeing adjusted EPS. They are seeing adjusted EPS of $2.3, $2.30. Previously, they saw $3.60. Estimate was for $3.39.
That's right. CHIP Act passed the House, which should boost semiconductors, or that is going to be sell the news. But you can see they pretty much got spared. They're only down around 8%, which ain't bad because, boy, it was some terrible guidance. And so I looked at all the other semiconductor stocks, and they were down a little bit. So Intel is not going to drag them down. They just did a terrible job, is what they did. And the CEO said they have to do better. Okay, and so, but you're not getting any sympathy play off that. So we'll see what happens tomorrow. Again, we got a lot of data coming out in the morning. We'll see how that goes. We'll learn about wages. It's either European GDP or CPI for them. I can't remember which one it is, but I don't think it's going to affect. I don't care what it says. I don't think it's going to affect our market at all. And so, we'll see how long this pushes up until we get a pullback. We don't have, I don't think our CPI comes out for another 2 weeks at least. So, from here to there, who knows? I think you'll get some profit taken along the way, because it has a lot of stocks that moved up big time. And so people like to secure profits in this. And as I'll show you when right now, when I looked at it today, we were pushing up against, that descending channel on the NASDAQ and the S&P. And so, we'll see if we can break out of it and how far this continues. A lot of them are heading for that 100-day moving average, trying to reclaim that. And so, right now, even though sentiment is horrible in the market and a lot more people are still bearish, remember I told you this back in June, or when I did a video for the members showing when things get that bearish, right? That's what usually happens. Again, is it the bottom? I don't know. Okay, you got to answer those questions I answered at the beginning of the video for yourself. You know, I personally don't think it is, but it doesn't matter to me. You know, because one, I'm in the market, and two, I'll show you. I got a lot of good stuff I'll show you probably Sunday that I think you'll actually really like, and you'll get a good look at it and stuff. And so you get to challenge the old dollar cost average all the way down, or actually take macro and TA into account before you make actions and moves and things like that. It's pretty good. I think you'll enjoy it. So anyway, hope you guys have a good night, and I'll see you tomorrow.